All right, hopefully we're recording. What's up, YouTube? It's your boy Bitcoin Lunatic. And today I want to be going over what I'm expecting um in the futures market for US 30 or YM. Um I'm going to be going over my bias. I also want to be going over like fair value gaps and order blocks as well. So shit, let's just hop straight into it. You know what I'm saying? So if you look to the left of my chart, you see the daily time frame, and on the right hand side, this is the 5 minute time frame. So these are two different time frames. But if we pay attention, as a matter of fact, let me do this for right now. If we just pay attention to the daily chart, it tells the whole story. So I basically want you all to pay attention to the fair value gaps, pay attention to respect. When price respects levels, you have to pay close attention to that. You have to pay close attention to equilibrium of fair value gaps and equilibrium of order blocks because it's basically going to tell you which direction the market going to go. So if you pay attention right here, we have a bearish fair value gap, right? We have a bearish fair value gap. And and as you can see, price broke. Let's see if I can get me a little circle. Can I get a circle? Yep. As you can see, price broke this low right here, right? You know what I'm saying? Okay, boom. Price broke this low right here, and we came and we were traced into this fair value gap, bearish fair value gap. Once we come to the fair value gap, you can go to a smaller time frame and look for sell entries to take out this liquidity below this low. Take out that sell side liquidity below that low. You know what I'm saying? That could be your first target. Signals that I like to use or things that I like to look for that helps me like know that this fair value gap is going to hold is things like when price comes into it. You see how it came into it, but it closed right here. It wicked it, right? So if you pay attention to the candle before the candle that wicked the fair value gap, as you can see, I like to call this a C2 sweep. And basically what that means is a candle two sweep. That means that the second candle swept the high of the first candle and closed back within the range of the first candle. When it does that, we can expect for the third candle to expand lower. So we have all of that. We have the swing low being broken. We know we bearish. We have a bearish fair value gap. Price comes into a fair value gap and price comes into a fair value gap and wicks it. And not only does it wicks it, it does a C2 sweep. So on that third candle, on this third day, we could come in on this day looking for sales to take and we can aim for 2 to 1, 3 to 1s, you know what I'm saying? We can aim to take our liquidity below here, which we do eventually get right there. It's that simple. Um, and if you want to be like technical, I like to do overlap. So like this right here, this white candle, we could consider this a bearish order block. And you could take the body of the white candle and draw it out in time, right? Finna show y'all some. And then you could take the low of that bearish candle and draw it out in time, right? It's still an order block. You know what I'm saying? So you see how, let me see. I want to make sure I get that low. Yeah. So you see how price came to the low of that order block and there's a fair value gap right here. You see how that's overlapping basically? When you see stuff like that, it's almost guaranteed that the trade is going to go in your direction. You know what I'm saying? So we came, boom, we came down. Look, same over here. We got a bearish fair value gap, right? When price comes into the fair value gap, check this out. Check out this bearish order block. This swing high right here, three candle pattern. Look at the one in the middle. That's the bearish order block. Get that body. Get that open. Draw it out. You see what I'm saying? You see how price was gunning for that open? You know what I'm saying? And you get the low of that order block. See how price came into that area, that zone, and then it just dropped. It just simply drop. Pay attention to the C2 sweeps. Look at this. First candle, second candle, right? You see how the second candle broke the high of this first? You see how the second candle broke the high of the previous candle and closed within the range of it? We can expect for that third candle to be bearish. So on this day, we could be looking for sales. That's if you want to play it safe. Some people just when it comes to this area, they automatically start looking for sales, and that's perfectly fine. But if you're looking for that 100%, you know what I'm saying, then it's like you wait a little bit, you know what I'm saying? Then right here we have a reversal. And I know y'all are thinking like, how do you know that price wasn't gonna come to this fair value gap? Like, how do you know when that fair value gap was created and price started coming up? How do you know it's a reversal? You wait. That's why I wait. Like, it's literally that simple. And secondly, because okay, we swept this low, right? We swept this low. We took our sell side liquidity. So how do I know we bearish? Because once we swept this low, we have expansion met with expansion, meaning like I'm really giving y'all the sauce. We have a bearish fair value gap, and then what happens? Price creates a bullish fair value gap. That's a reversal. It's that simple. That's a reversal. You swept liquidity, and when you swept liquidity, you created a fair value gap. And after you swept that liquidity, you created another fair value gap in the opposite direction. That's called a reversal. It's literally that simple. Literally. So we know that when price creates this fair value gap, the second one, now that we have fully reversed, and we also broke this swing high right here. We broke this high right here. You see? Let me get rid of this line. I don't want to have too much on the charts. But you see how we broke this high right here? This is minor buy side liquidity. Right? We took out that minor buy side liquidity. That's a reversal. So when anything that comes down is not a continuation, it can be considered a retracement. So for we can expect for that bullish fair value gap to hold as what? Support. Pay attention to equilibrium. You see the equilibrium, the line in the middle of the bullish fair value gap? Notice how price comes into equilibrium and closes right here. What is that? What do we call that? As a matter of fact, I don't need to do that. We call that a C2 sweep. So what does that mean? We can expect for bullish momentum to come into the market. The next day, we did not get bullish momentum, but could you possibly have caught some buys? I'm pretty sure on the lower time frame, yes. I enter on the 1 minute, the 2 minute, or the 5 minute. So I'm pretty sure there would have been opportunity for buys. You know what I'm saying? Look at the next day. The next day, we get that bullish momentum, right? And we create another C2 sweep right here. The second candle came through and it closed above the body of the first candle, above the whole candle, for real, for real. So we already know the next day we looking for buying opportunity. And look, it starts to rise up, starts to rise up. And once it rises up, it creates another fair value gap. Oh, and let me say another thing about this area right here. Once this reversal occurred, precision. It's all about precision. You got equilibrium of this fair value gap. Then you see this down close candle right here. You can consider the open of that candle. Consider that a bullish order block. We're gonna say bullish order block. So when price comes back down into that area, bing, bing, we looking for buys right here. We looking for straight buys, and it takes off, right? Once it takes off, come down into a bullish fair value gap, which is if you all don't know, a fair value gap is a 3 candle pattern where the first candle and the third candle, the low of the third candle and the high of the first candle don't touch. And you basically have this space in the middle. That's called a fair value gap. You get what I'm saying? So when we came into that fair value gap, we showed bullish momentum. And what did we do? I don't know why I keep doing that when I can just copy what I already did. Okay, what did we do? We had a C2 sweep. It swept that low or that previous candle and it closed above the body. That's a good one. So we know on the next day we looking for buys, and look what the next day was. It was a bullish day. You get what I'm saying? The day after that, it was bearish. It retraced. This is a retracement. This is not a reversal. Some of y'all think, oh, price broke this high and took out liquidity, so let's look for sales. No. We don't look for sales when price breaks a high unless we doing a reversal. You get what I'm saying? So it's like if we in the uptrend, why are we looking for sales when price break a high? You get what I'm saying? So if price has been higher high, higher low, higher high, higher low, when it break this high, what make you think it's gonna go down? Like what in your mind be like when it break this high and take this liquidity, it's finna drop. Like, no, it's not finna drop. It's finna go up. And if you pay attention, look at this order block right here. Came to the high of that order block, came and retraced into it, and then it took off. You get what I'm saying? Came, expanded, consolidated, basically retraced into what? Another fair value gap. So we can look for what? Price to continue to go higher to take out buy side liquidity. Is that simple? Is that simple, man? So my predictions for this upcoming week on US 30 or YM is basically bullish momentum. I don't see why it would be bearish. You get what I'm saying? I feel like we're going up, and I feel like we're going up to take out this buy side liquidity. And it's just that simple, man. So if you all want to get into things like, okay, like for some of y'all, okay, you see this bullish fair value gap, and let's say prices up here, and you know you need to see some type of retracement. So look, you see on this day form, it did a C2 sweep, right? Did a C2 sweep. So we bullish, but I'm finna show y'all how to catch sales in the uptrend. You basically selling the retracement. So we're bullish, right? But we create a C2 sweep on the daily chart, but we bullish. We create a C2 sweep, a bearish C2 sweep, and then we have a fair value gap resting under equilibrium. I'm pretty sure if I draw this from the low to the high, it's gonna be under equilibrium. Yep. This the 50% mark is under equilibrium. That'll be a good area to buy when price comes there. So we know that price is at least going to go to this fair value gap before continuing higher. So we can switch our bias to bearish until it gets here. And then once it gets here, we can switch it back bullish. So we did the C2 sweep. We closed. On the next day, we can expect to look for sales. On the day after that, we can basically keep looking for sales until it get to that point POI or point of interest. Once it gets to that point of interest, now we switch. We switch from what? We switch our bias from bearish to bullish. And we expect for price to go up, take out liquidity. It's literally that simple, bro. It's that simple. Like the difference between a retracement and a reversal is a retracement is if price is expanding higher and is going down and you have PD arrays in this expansion leg, like an order block or fair value gap, you can expect for that to be respected unless we are at a, I would say, a external range area of liquidity. So what I'm saying is like stop thinking that like, okay, boom, right here, right? Let's say price was coming up and it came right here. Some people will look at this like, oh, this is buy side liquidity above this high. So let me sell. Like, let me look for selling opportunities. Yeah, you possibly could have caught a little sale right here, but like this is a minor area of liquidity. You get what I'm saying? Because it's inside of a bigger range, which is this area, which is from here to here. That's the range. And all these highs hold liquidity above it, right? So what makes you think when price gets to this high, it's gonna simply just reverse and go lower? What makes you think if it didn't do it right there, what makes you think it's gonna do it right here? What makes you think that it's gonna come to this buy side liquidity in reverse when it got this external range buy side liquidity right here, which is the ultimate liquidity? You get what I'm saying? It's going after the ultimate every time. You get what I'm saying? Like, for example, when price came, okay, when price, boom, this was a reversal, right? Okay, you see this area right here? It swept the high, right? And but it reversed. And you like, okay, how do you know that? Like, how do you like that's a reversal? Yeah, we see that it reversed, but it's like, how you know it wasn't gonna be a retracement into this fair value gap right here that it created because you just wait. It created a fair value gap. Wait for it to get to it and see what it do. And if you would have waited, you would have seen that price crushed it and went straight through it. And once it went straight through it in the process, it created another fair value gap, a bearish, opposing fair value gap, which was bearish. So that means that that is a reversal. Bullish fair value gap that took out an area of liquidity matched with a bearish fair value gap on that same time frame in that same area. That's a reversal. Like you don't have to overthink. Don't like for a fact when that fair value gap is created, that is not a retracement. We is not looking for buys no more. We looking for a price to come into that very fair value gap, and then we're looking for sales. It's that simple. That's how you know which way it's going. It's literally that simple. You get what I'm saying? So, uh, okay. Now you see how we got all these lows, right? Let me take some of this shit off the chart. Let me take some of this off the chart. I'm finna school y'all folks. You see how we got these lows, right? We got the lows. We got more lows. We got more lows. You know what I'm saying? And basically, resting below these lows is sell side liquidity, right? Right? We got lows. We got lows. We got lows right here. Look at that. What else we got? We can keep going. It came all the way right here. We got this low right here. We got this low. We got a low right here. You know what I'm saying? So out of all these lows, it's like, how do you know which low is gonna be where it reverses at? Bro, bro. First of all, you do all this on the daily chart. If price is making bearish fair value gaps, right? And it, wick the low, close right here, and then look at this candle. Big ass came all the way down here, close right here. It's basically consolidating. Breaks through. You don't see no bullish fair value gap. You don't see no bullish fair value gap. Pay attention to what I'm saying. You don't see no bullish fair value gaps. All you see is bearish fair value gaps. So when price comes into those bearish fair value gaps, after sweeping out liquidity, expect for it to continue lower to take out more liquidity. Stop thinking that it's going to reverse. It's not going to reverse. It's coming into that bearish fair value. You got to take out more liquidity. Look at this. Took out this liquidity below this low. You're like, oh, how you know when it did these big ass expansion candles that it wasn't going to be a reversal? Because it ain't no bullish fair value gap inside of those expansion candles. It's just three candles that's coming into a bearish fair value gap to continue lower. And you like, okay, when it took out this low right here, took out this sell side liquidity, which was also below this area right here, there was sell side liquidity to the left. And you like, okay, right here, it created a bearish fair value gap, right? But what also did it create? A bullish fair value gap right there. You just have to wait. Now, if it comes into that bearish fair value gap and it does a C2 sweep, we can expect for it to go lower. But when it came into that bearish fair value gap, it went straight past it and closed. And then on the next day, it was bullish and it created a bullish fair value gap. So when price comes into that bullish fair value gap, we can expect for price to rise higher. It's that simple. We got multiple C2 sweeps. You get what I'm saying? We got this low that was swept. And then we got the low of this daily candle that was swept, right? Price closed above. Price swept this candle's low, and it closed above the whole candle. You know what I'm saying? Engulfing it. So we can expect for the next day to be what? Bullish. We can expect for buys. And it's like, if you need like levels, just use the previous day levels. Look at this. This is the previous day open, right? Draw that out in time, right? When the next day opens up, I mean, if you bullish, expect for price to take out that previous day open. You know what I'm saying? Or that previous day close and expect for higher prices. Now, if you want me to show y'all some secret sauce, you know what I'm saying? Look at this. That's already some good sauce that I just showed y'all, but draw from the low of the candle to the high and expand it out, you get equilibrium, right? You know that equilibrium gonna hold, price gonna continue higher. You know what I'm saying? It's Putting y'all down, man. When you see them C2 sweeps on that third candle, expect for it to respect equilibrium of the previous candle. You're like, what? What you just say? You talking too fast. Let me slow it down for you. When you have a C2 sweep on the second candle of the swing high, break the high of the first candle. Let's say we're looking for sales, break the high of the first candle and it closes within the range. We know the third candle, we can look for sales. You draw the field from the high to the low of that candle that did the C2 sweep and expand it out. Expect for equilibrium to be respected. You see equilibrium right here? Expect for it to be respected. Hold on right quick, y'all. Hold on right quick. Y'all give me 1 second. 1 second. Doing something right quick for the little one. For the little one. Hopefully this video is a WVid. You know what I'm saying? Got my whole government name right here. I'm gonna have to change that shit for future. How did I do it right on front video fit? Profile picture rename. Yeah, yeah. Call me BTC lunatic, man. But yeah, my government name is Keontae Jones. Anybody's name can be found, so I ain't tripping on that. But yeah, so yeah, bro, that equilibrium, when you know what you're doing, when you know how to work that equilibrium, that motherfucker going. Look at this, that boom, right here. We got this, right? We got this bearish order block. I mean, we got this bullish order block right here, right? We got the high of the bullish order block. Price came into it, right? But look at it. Look at this bullish candle. Draw it out. See how price respect and equilibrium? You get what I'm saying? That's a good signal. Come on now. It's all about signals. It's all about, you know what I'm saying? But yeah, man, this is really how I view the market. This is how I look at it. You know what I'm saying? Order blocks, fair value gaps, and closes. Like, where did the candle close at? It's really like I see this shit so much. Like, I'm just looking at the chart and I see it. Like, I see this bearish fair value gap right here. You get what I'm saying? And in the midst of that, I see a C2 sweep right here. I see this right here. That candle wick the first candle, and then it closed within the range of the first candle. So I can expect for expansion on that third candle, which we got. You know what I'm saying? Draw that field from the high to the low and extend it out. Expect for that equilibrium to be respected, bro. It respected it. Like, it didn't, when I mean respect, meaning like it can break it, but it ain't gonna close above it. You gonna respect me. You gonna respect me. Respect. It's all about that respect. RESPECT. Find out what it means to me. When you start seeing things being respected, you know what I'm saying? Like, look at it. Boom. We got this expansion right here. Consolidated came down. This ain't no reversal. We taking out this. We taking out this sell side liquidity. And you know what I'm saying? We got this order block right here. We got this order block. But if you can see like what I can see, then you see this gap right here that it was really coming to, which is the close of this up close candle and the open of that second one. That was a gap. Draw it out. That's really where it was coming to. So we can take that order block off. So we can look for buying opportunities in this area. It's not no, it's not it's not a retracement. I mean, it's not a reversal. Like, when price comes to this area and it retraces, well, this one is a little tricky because, as you can see, we did get, okay, we did get a bearish gap right here, a bearish fair value gap, right? We got a bearish fair value gap. But if you look at the grand scheme of things, look how high that bearish fair value gap is compared to this level of interest. It's all the way up here. So it's like when price comes into it and we come right here, we know that we haven't fully reversed yet, because the only way I would look for sales with this instance where it breaks sell side liquidity and retraces into a fair value gap is if it would have broke this low right here. If it would have broke this low right here, that low right there, then I would have been like, okay, created a bear fair value gap. It's coming in. It broke this low that created this whole range. Like we still inside of a range. Like, you get what I'm saying? Like this a whole range right here that we inside of. You feel me? So it's like, fuck the minor liquidity. Just look at it like this. From the low to the high, this a whole range. If it gotta at least break and close below this low of the range for me to even be looking for sales, you know what I'm saying? Like long term for the buyers, it didn't do that. So it's like, if you create a bearish fair value gap, I'm still gonna be looking for buyers. And then if you take the low and the high of the range and extend it out, you know anything under equilibrium is oversold anyway. So any PD array under equilibrium, you can expect for price to continue higher when you inside of a range. So this is a gap, which is a PD array. It's a discount array. It's a discount area to get in. Is that simple. This order block is a discount area to get in. It's under equilibrium. Expect for price to, when it touch those levels, expect expansion. Expect expansion. Expansion, expansion. You get what I'm saying? You get the expansion, right? We took out liquidity above this high, but then you get a bearish fair value gap right after. You get what I'm saying? I would look for this. This could, in my eyes, be a reversal because we took out this liquidity and we came back into the range with expansion. Now, if it would have came back into this fair value gap right here without breaking through it and created a C2 sweep, then I would look for buys. But it didn't do that. So we're not looking for buys. It's that simple. You know what I'm saying? Like, I could do this all day. And really, like, how I get on board with this shit, like, if y'all want me to break this shit down, I'll break it down a little more. Like, I'll break that shit all the way down, bro. I'm gonna break it all the way down for y'all, folks. Like, I can't break it down no lower than how I'm finna break it. Like, what I'm finna show y'all, bro, this damn near goddamn strategy, you feel me? This is how I enter. I'm finna show y'all how I enter. I'm finna, man, why there? Jed, listen, Jed, why there? Check me out. Check me out. We looking for buys, right? We looking for buys. We bullish. This the hourly chart. Why are we bullish? Well, we took out this liquidity right here. We're ranging. You know what I'm saying? So when we're ranging and take out liquidity, we can expect for price to take out the opposing liquidity. So we took out this sell side liquidity right here. You feel me? We can expect for price to take out this buy side liquidity. It's that simple. It's the hourly chart. You know, you got to see where is price drawing to. It's drawing to this area. Like it's obvious. So we bullish, right? We have this previous hourly candle was bullish. We haven't got to this area yet. So any candle that forms, I'm gonna be looking for a reason to get in, period. So we got this 1 hour candle closed bullish. So the next 1 hour candle, like we gonna keep looking for buys until it get to this area, but it's based off the hourly candle though. So look, why there? So look, check me out. Price is closed right now, like the market closed, but this is what I would have did. So you got this hourly bullish candle, right? And we aiming for this buy side liquidity that we haven't got to yet. So any candle that forms, once it opens, I'm gonna be looking for reasons to get in. I take the close of the previous candle. I take the open of the previous candle. I draw it out, right? And I basically use that as support when I'm bullish. So when price opens on the next 1 hour candle, which is right here, I'm basically looking for a change in state of delivery. I'm looking for these levels to be held as support or used as support. And I'm looking for a set of down closed candles to be closed and broken above on the 5 minute. And I call that a change in state of delivery. We're basically changing the state of delivery from bearish to bullish. So you see these down closed candles, and then we're met with these up closed candles. Did price break and close above it? No. Before creating another down closed candle, it didn't. So it created another down closed candle right here. right? It broke and closed above the down close candle. Now there's two things you can do. You can enter at the close of this candle. Like when this candle closes, you can press buy, or you can wait for the retest of that change in state of delivery order block, which is on that red candle. You wait for price to come back into it and touch it, and you can buy. Either way is a win-win. You obviously get the best entry if you wait for price to come back to that line. If you want me to be real, I don't wait. So I would have pressed buy right here. I would have put my stop at the low of that candle, and I would have aimed for a 2-to-1 or a 3-to-1. Let's say we aim for a 2-to-1. The market is closed right now, but I guarantee you, if it was open, it would have gave it to me. You get what I'm saying? Check me out. Check me out. Right here. We got that candle right here. Right? We got the previous candle. We got the previous candle close. We got the previous candle open. Right? Boom. We come. As you can see, price broke through it, tried to take out the previous candle low, but it didn't. I don't believe it almost did, because it's the previous candle's low right here. Did it? No, it almost did take out the previous candle's low. But look, when it came down, it created these sets of down closed candles. Once price breaks and closed above it, we could look for buys. You know what I'm saying? Broken close above it right here, we could press buy. We can go long right here. We could put our stops in this area right here, and we can aim for a 2-to-1. It's like the market closed and I'm too close to the close of it, so it's like it ain't showing the full trade pan out. But another way you could have did it is you could have went to the 2 or the 1 minute and did the same thing. So on the 2 minute, you probably would have got it. Cause look, we got these set of down closed candles, and we got this, right? It came up, but it didn't break above the high. It didn't break above this level right here before creating another down closed candle. All right. Once it created another down closed candle, we use that as the new reference point. And once price breaks and close above it, then you just simply press buy and you don't wait. You press buy. You put your stops at the low of that candle, put it right there. You know what I'm saying? Give yourself some room, some wiggle room, and you aim for a 2-to-1. And there we go. We got it, and we got a three. We got a three-piece chicken tender combo with barbecue sauce and a strawberry lemonade. You feel me? So it's like that's really that's really all I do. I basically get my direction from I get my overall bias from the higher time frame, and then I get my I get like that, and then I get my hourly liquidity areas, like buy side and sell side liquidity based off my bias. So if I'm bullish, I'm looking for buy side liquidity to be ran on the 1 hour, like ran and to keep going in that direction. And then I basically get on board, you know what I'm saying, on the 5 minute or the 2 minute, you know what I'm saying? I get on board with the next. I trade hourly candle opens. So like when the candle opens, I'm waiting and stalking it and waiting for my entry. Once my entry forms, I enter. You know what I'm saying? But it's always based off of the hourly candle open and the candle previously before it, if that makes sense. You get what I'm saying? So that's really that's really all it is. That's really all it is. It's that simple. Um, like for instance, right here, we have a C2 sweep right here, right? On the hourly. Price broken close above boom. On that third counter, we can expect bearishness, right? So I would take that. Then we got this candle close. We could basically use that as resistance. You know what I'm saying? So we stay on the 2 minute, right? We can expect for price to come and, on the hourly chart, shit, take out this low right here. Run that liquidity, So when this third candle or this swing high opens, we can simply wait for a change in state of delivery. Wait for a set of up close candles to be broken and closed below. Um, we got these up close candles right here. We draw it out in time. Price broke and closed below right here. This candle, it was a little gap, you know what I'm saying? But it did it. So you go short right here, put your stops at this, right here, and you can get you 2-to-1. You know what I'm saying? Boom. And if you want to hold it into that higher time frame area of liquidity, which is below this low, you can. I be struggling with holding trades sometimes, I'm not gonna lie. But you could have got you a 4-1. And it actually kept going and going. You know what I'm saying? You could have got you a 6-1, you know, or whatever. You could have got you a 6 right there. But you just aiming for that 3 or that 2, you're gonna get it pretty fast. Remind you, this entry is off the 2 minute. So it didn't take long before it panned out. You know what I'm saying? Hopefully this video was insightful. You know what I'm saying? I appreciate y'all joining in with me and going over these things. And yeah, we out.